Okay, welcome to my first account that I'm starting from scratch with trades from my system, my Abundantly Erica system, and the Millionaire Mentorship Program that I mentor. And I'm starting this account with $100,000. I'm not saying I won't add more because I might, but I am starting this account with $100,000. Today is February 11th. I started it about a week and a half ago. And what's interesting about that is that Amazon had their earnings, let's see, was it last Thursday? I believe it was. And so I had this fresh $100,000 in this account, and it was so tempting to trade it. It was so tempting, but I did not. I did not trade it until after Amazon's earnings because I don't know what's going to happen on the earnings. Okay? So I wanted to see what was going to happen, and I wanted to trade Amazon with it as one of the primary stocks that I'm trading in this. I'll probably trade a maximum of 5 stocks in this account, maybe 3 to start probably, but 5 max I'm hoping for. Okay, so I will just share with you what I'm doing here and what I'm thinking. Okay, so the first thing that I did was waited until after earnings, waited for that implied volatility crush. We got a sell-off on Amazon, which I was happy about, super happy, and so then I went in and I bought some Amazon Leaps. Okay, I am buying these for different reasons. So I bought 3. I bought the 6/18/2026 expiration with the 215 strike. That's in the money. That was in the money when I bought it. Okay, and then 6/17/2027 for $300 strike. That's way out of the money. Okay, I'm buying about 2 of those. So I'm buying these for very distinct reasons, which if you follow along, you're going to figure out why. This one I probably won't hold as long as these 2. Okay, so that's my thinking there. I'm not using them for anything right now because I'm waiting for a pop in Amazon to be able to sell some calls against 1 or 2 of them. That's what I'm waiting for. Okay, I'm being patient. I'm waiting. Okay, all right. The next thing that I did was I decided I would like some Amazon shares on top of owning these leaps and selling calls against those potentially, or using these leaps for profit at time frames that I want to sell them for and profit ranges I want to sell them for. I also want to get some Amazon shares, but I want to get them for less than what Amazon is right now if I can, because again, we're after earnings, and a lot of times after earnings there can either be a rise or a fall in the stock, and that can happen at any point in time. But I just wanted to see if I could potentially get these shares for less. So I sold a 225 put, 2 of them. And I made these into put credit spreads by buying a put as well. People are like, why did you do that? Why didn't you just sell just a put? Well, because I like the downside protection. I know that limits how much money I am getting into the account, but I really do feel strongly about this, that this limits my downside. And if this account ever gets to the point where I need to use a lot of the collateral in it, it's just a good habit for me to get into. I don't really need the collateral right now because I have a bunch of cash. I still have $89,000 of cash here, but that's what I chose to do, and I prefer that trade to the cash secured put. After that, I went out and did the same thing on IONQ. So this was the expiration date of 3/7. And I chose, this is a call credit spread, not a put credit spread. So I'm actually, I'm already in profit on this one because the day that I sold this, IONQ was higher. I saw that IONQ is sort of having a hard time breaking out beyond like a 41 price. So, and that is just, I'm not a chartist. I'm just noticing what the stock is doing over a 3-month period in time, and I note the highs and lows, and that's how I trade. That's literally how I trade. So anyway, I bought a 57 strike price and I sold the 47, and I took a good amount of premium there. So we're going to flip over to another screen in a second where I can show you what I've spent so far. I mean, we can see what I spent for my leaps right here on the cost basis. So I have spent, let's see, $6,100 on 2 leaps and $5,000 on another leap contract. And I'm a little bit under water on those. I don't care. Doesn't bother me at all. This is so minimal. It's ridiculous. Even if they went down 10%, I've got a lot of time to be right on this. So we know what I've spent on those, but let's go and see how much premium I have collected to get me up to $100,008. What a profit so far. Okay, so now we're getting over to the trade log, and we see that the IONQ trade that I did, I opened the puts. I got paid for the puts for 586, and I paid in the spread 271. So right there, that's a incoming cash flow of 315 on the Amazon. So those are calls. I don't know why I keep saying puts. Those are calls. That's a call credit spread. It's a bear call spread. The next thing on the put credit spread, that is correct. The profit there between 498 and 57 in premium, that's going to be 441. So that's the amount of money I've taken in so far in premium in this account, and then I paid out for these leaps contracts, which you can see, and then I made 210 in interest. So that's literally what that looks like. So right now I have created like a taxable event. If these expire worthless, my account is still almost worth what it was when I started, but I have created some tax liability for myself. So I'm going to be taxed if these just expire worthless on 315 and 441. Okay, so that is very interesting to be aware of. And then I think I'm going to take you over to one other page here and just show you what my return is looking like, so we can track that as we go along as well. When we started this video, we had a small profit in the account. It was $108, and now we have a slight loss. So that's how stock market works. It goes up, it goes down, it rarely stays the same. So it's interesting, right? I mean, nothing to sweat about, but anyway, so during that short period of time, we are now a little bit down, no big deal at all. And we can compare our rate of return to these guys. Now, this is far too soon to they have the same sort of dip we do, which is interesting. But we won't be able to surpass this or get close to this until we just have more history for this software to keep up with. The other thing is that I want to be really clear about the fact that it'd be nice if I got a really great return in the next 3 months, but I don't expect this account to really be a great profit generator for me until 3 to 6 months into this. And that is because mostly I'm going to be running diagonal spreads in here. And the thing with the diagonal spreads is I have to buy leaps contracts for when I start those diagonal spreads. And leap contracts on stocks are really susceptible to drawdowns when you first buy them. And why? People say that's not true. It's true for the diagonal spread system. It's not true if you just have a leaps in general, okay? If you're just buying and selling leaps, then no. But what I am doing is I'm buying leaps, and then I am taking in premium income from owning those leaps by selling calls against them. So over time, it won't really matter when those leaps draw down, because I'm not going to take money out of this account, I don't think, just yet. I may in the future, but the premium that's going to be coming in is going to be padding the account. Okay, so I don't expect this to be, I wouldn't be surprised at all if this account draws down in the meantime. I am completely comfortable with that because my plan for this account is long-term. I have a long-term outlook for this, and I'm really taking advantage of theta and time to trade this portfolio. So I will be checking in the next week, the next 2 weeks, and showing you more of what I'm doing here. But I hope that you guys will get some more insights into how I trade and see if it might be a system that you also want to learn.